Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Bringing back a returning guest, someone who happened to save me tens of thousands of dollars on my tax return. Thank you very much. David Weiner, how you doing from Cost Segregation Services? How you doing, man?
I am busy, but I'm wonderful.
Awesome. Well, let's see if we can't
you?
I'm doing great, man. Let's see if we can't get you even busier with more one rental at a time followers and students. Why don't you gave me some numbers off air about the amount of money you are saving folks. And let's talk about what you've completed and what you have in process, and then let's get you some more business. What are the numbers?
So far this year, I have been able to provide folks with $6.5 million in additional deductions from their taxes and about 2.4 million in tax benefit. That's cash money off of their taxes. Wow. This year.
So $6.5 million bucks. That's roughly $1 million a month because we're at the end of June.
Those are the ones that are finished.
Correct. Yeah. No, that's awesome, right? So you whack $1 million bucks on the top line, that rolls down to the bottom line, and you save cold hard cash of 300 grand a month for people. So that's really cool. What do you got in the pipeline? What you working on?
Right now, I'm working on 8 million in deductions and 3 million in tax benefit.
Those are crazy numbers.
All of which should be completed hopefully by the end of July into August.
Wow.
So, and then whatever else we add, I'm shooting for big time.
Yeah. Well, this is people need to realize this is, cost seg. We're going to do a 101 kind of back to that session. What is cost segregation, sure, bonus depreciation, all of that. But what I want people to realize is these impressive numbers. These can all be mom and pop investors. I mean, one of the deals you helped me on was a little is it 200K duplex or 191 right, or something? I don't remember, something like that. And, you threw me 10,000 bucks. I was like, thank you very much. So again, these are, it may have started with the big wigs of, yesterday. Cost segregation now with cost segregation services can be brought right down to mom and pop, right? I think you had a floor we talked about last time. Hey, if you're buying a 50K house, don't worry about it. But
yeah, it used to be that people thought this was only for the biggest of the big companies that bought big commercial buildings. And it was for a long time because it was expensive. Yeah. Way too expensive. The company that I'm with, which is CSSI, Cost Segregation Services, Inc., has worked very hard to make it available to the small and medium-sized investors. And the vast majority of the studies that I'm doing now are for people who own 1, 2, maybe 3 rental residential properties, Airbnbs, those kinds of things. And so basically the criteria that I use is if the cost basis or the purchase price of a property is $200,000 and up, and you've owned it for less than 15 years, I can do a cost segregation estimate for you. And then obviously I'm not going to recommend the study to somebody that it doesn't make sense for. So if we run the free estimate and it makes sense, so much the better. And
yes. So again, I think a lot of folks that are following my channel, I know, because again, I think we're going to do something cool in video 3 today, which I'm going to tease. I'll just leave it right there. But again, you don't have to be a bigwig to do this. A lot of my followers, if you're doing deals, this is at least something you get a free estimate on, right? If somebody wanted to get a free estimate, we'll do it at the end of the video. How do you want them to reach out?
They can call me at 770-224-8504, or they can text me at 770-367-8091. They can send smoke signals. They can
folks,
call you and have them.
Yeah, I would text David, just say, hey, I saw you on one rental at a time. I want to talk. You'll schedule a call. Free estimate.
And many do.
Yeah, I'm sure they do. Well, again, it's real money. David, you're saving people real money. Not only top line kind of tax benefits, but real cold hard cash. So
I got the best job in the world.
I think you might.
I save people money and make people money.
Yeah, I think you might. So let's do a 101. What is cost segregation? Because again, I think a lot of people don't realize that mom and pop can take advantage of this, and they think it's something only that Grant Cardone can do when he buys an airplane or something. I don't know.
First of all, cost segregation is not a tax shelter or a tax dodge or anything shady like that. This is something that's been a part of the IRS tax code for, well, since the 50s, 60s, I think. But it was only done by a few people, and it was only for the biggest of the biggest commercial buildings. Basically, what it is we take a look at your property. Typically, if somebody buys, well, like your rental.
Yeah, the duplex.
That we did, the duplex, right. So typically you would depreciate that straight line over 27 and a half years, the entire cost of the building, you know, but the IRS says you don't have to do it that way. In fact, the IRS prefers it be done this way.
Yeah.
By doing a cost segregation study, we separate the real property from the personal property. Anything non-structural in that building is considered to be personal property, and it can be depreciated at 5, 7, or 15 years. By accelerating that depreciation, or if we're depreciating those things over a shorter life, you get a bigger deduction.
Yeah.
Because
let's be very clear, right? You get the same overall deduction through the life of the building, but you get to absorb more of it early.
Correct.
Right.
And then because of the Tax Cuts and Jobs Act, anything that was purchased after September 27th of 2017 and the end of 2022 qualifies for what they call 100% bonus depreciation.
Yeah.
Bonus depreciation means you can take all that 5-year property, 7-year property, and 15-year property and deduct it totally the first year.
Yeah.
And so once we identify that, we can actually get them a huge tax deduction for this year.
Absolutely. And that's what you did for me. Saved me $10,000 in cold hard cash, or 98.77 or something like that. But it was easy. It was quick. For me, you got a quote, right? I called you, gave you the numbers. Then we scheduled with my property manager. They got in, take some pictures. Cause again, it has to be an audit, right? It has to be, you have to go in and look at this thing. So it is a real process. It was a lot of fun. So let's just give some people some rough math. Again, math sometimes is not folks' strong suit. So is it 27 and a half or 28 and a half years straight line?
For residential, residential, long-term rentals, it's 27 and a half years.
So let's assume you got a property for $275,000, and we're going to exclude land, right? So that is the building cost. And again, assuming you bought it on January 1st, you'd be taking $10,000 depreciation going forward. Correct?
Correct. Yep.
Right. So folks, what you can do with this study, and again, everybody's study is different. That's why you have to reach out and do these things. What you might be able to do in this scenario is, instead of taking $10,000 the first year, you might take $42,000 the first year, which again is going to impact your bottom line and how much cash either you pay or get back from the IRS. Now, to be clear, that 42 comes off future years. So instead of getting 10,000 in year 2, you might get 9,100 or 8,700 or whatever, because it's the same total number. It's just you're getting all of that year 1. And this is what the rich do. You want to know why all these syndicators are popping off and doing all these things and telling all their LPs that they get a big tax benefit? It's because of this cost segregation and bonus depreciation. You can do it with a house, a duplex, all the residential stuff.
And to be very clear, there are differing ways depending on your status with the IRS, how you can apply this. If you are considered to be a real estate professional with the IRS, and it's not all that easy to qualify, you did, others do, you can use these deductions against your total income.
Correct.
If you're not a real estate professional in the eyes of the IRS, you can only use those deductions against your passive income. Correct. Which is essentially going to be your rental income, but not just for that property. So if you own 4 or 5 rental properties, you can add those together, use this deduction against all of that income, and potentially save a ton of money. If it creates a loss for you, then you can carry that forward to future years. You don't lose out on any of it. And even if you're not a real estate professional, you can take a $25,000 passive loss deduction anyway. So you can use a good bit of it.
Yeah. Again, these are things you need to understand, appreciate. Again, go ahead and talk to your CPA, talk about cost segregation, bonus depreciation, the tax, what was it called? What did Trump sign? The Jobs
The
Act?
Tax Cuts and Jobs Act.
Yeah. All of these things are legal. It's been in effect for 4 years. I used it last year. Many of my students and followers did last year. This is the last year you can use full bonus depreciation, right? The full 100% on 5, 7, and 15. Next year, it'll only be 80%. Is that correct?
Correct. And then it continues going down by 20% a year until it reaches zero. However, there are rumblings in the Congress that they are looking at extending the 100% bonus depreciation indefinitely.
Wow. Indefinitely. Well, that'd be fun.
We can hope.
That would be good.
Because it's a good deal. But even without any kind of bonus depreciation, cost segregation is a great tool for getting your money now rather than over the next 27 and a half years. Because if you put that to work, $100,000 of benefit put to work at the end of the useful life of the project is worth 200 million or $200,000 or however, I'm not that good with math either, but I have people.
Yeah, I got a calculator. Calculator's awesome. Yeah. So I want to hit one more time again, as a tech worker who made a bunch of money. I was not always a real estate professional, I guess is what I'm saying. So I had carry forward losses, and I just carried them forward. They accumulated. When I had a good year passive income, it wiped it out. So I never paid any taxes on my cash flow. That's how it works. These are things that, if you have questions, you need to reach out to David and say, hey, would this help me? Would this not? Tell him your information. He's going to tell you yes or no. I've had hundreds of students reach out to him, followers. If you're buying rental properties, you should at least have this discussion. Let's set the target at 200K or more, right?
200K purchase price. If you know the cost basis without land, and I can also teach you how to figure that out. But if you know the cost basis without land, then maybe 150,000 and up for the cost basis without land. But if you don't know what that is, figure 200,000 and up. Yeah. Anything you've owned for up to 15 years.
Yeah.
We can go back and make it like you took it the very first day.
There you go. Well, folks, I suggest a lot of you reach out and text David to set up calls next week. David, what is your text number? I think that'll be easiest for folks.
Text number is 770-367-8091.
Awesome, buddy. Thanks again. Thank you for helping me and Olivia. I appreciate it.